So, what is an independent insurance broker? Well, welcome to my podcast, Seeking Wisdom Through Real Estate, where we dig deeper into truly understanding and gaining knowledge from experienced and educated people. I am your host, Leah Massey, a real estate agent who is trying to educate myself more and take you along for the ride. So, every week we will be bringing you information to help you unlock the understanding in real estate. So, join me today with my guest, Jared Costa.
Hello.
He has 5 years of experience in the insurance industry, 5 plus years, I put. Is that correct?
That is.
Okay. He specializes in home and auto insurance. He works under the umbrella of um, Dahlberg, Shannon and Associates Insurance Agency. So, welcome.
Thank you.
So, what is an independent insurance broker?
So essentially, when you're talking, homeowners insurance, auto insurance,
Mm,
small business insurance, you have two types of agents.
mm,
You have a captive agent, which would be somebody like a State Farm or maybe an Allstate, where they can sell State Farm, and that's pretty much what they're restricted to.
mhm,
So unless it's something that say State Farm won't accept. So with an independent broker, you can essentially shop multiple companies.
mhm,
So like I believe our agency, we're somewhere between 55 and 60 different appointments.
mhm.
So that's 55 or 60 different insurance companies that we have the option of placing coverage with.
Oh, okay. Okay. So your the company you work for, what is it, Dahlberg,
Yes.
Shannon Associates. So what are they considered then? Like,
So we're an independent agency.
hmm,
So the agency essentially gets those carrier relationships,
okay,
and then myself, would have the option to use those.
okay, okay. And then now you said you're specialized mostly in auto and homeowners insurance, right? So we'll talk about the homeowners insurance a
Okay.
little bit on that one. So now again, as a real estate agent, we have it where they can do a home. They have to get a home warranty. Well, they don't have to, but it's preferred
Yes.
to get a home warranty. And then there's title insurance, and then
Hmm.
there's the homeowner insurance. So can you kind of and I think people get kind of confused. And I know the home warranty is more so on your like
Hmm.
appliances and the what else, and also the systems in your house. And then your title insurance is more so addressing past stuff, like the liens and all that. And then the
Correct.
homeowner's insurance is,
The homeowner's insurance. So the main difference between the home warranty and home insurance
mm-hmm,
is the home warranty will cover things that just say, the furnace goes out, it's 20 degrees, you're making it work overtime essentially,
mm-hmm,
and it just goes out. It's an old unit. It's due to be replaced. A home warranty would pick up something like that,
mm-hmm,
where homeowners insurance would consider that like a maintenance item.
mm-hmm,
So homeowners insurance doesn't typically cover maintenance. Um, it would be like if your furnace caught on fire,
mm-hmm.
that would be something homeowners insurance. It's like a sudden event.
Okay,
Um, would kind of differentiate between the two.
okay. And is there certain, I know too, also with the homeowner's insurance, like it protects against property damage, like you said, and it covers different things. Now, say if they're in a flood area
Mhm.
or things like that, will that cover that?
So it depends.
Okay.
Generally, you would need a flood policy.
Mm-hmm.
A flood policy is generally the only thing that would cover flood. Um, so that's something where when your buyer's in the process of getting through their mortgage, the mortgage company actually orders a like flood certification
Mm-hmm.
that says, "Hey, this property's in a flood zone," or "Hey, you're up here on this hill, you're okay, you're not going to flood." And if
Okay.
you're in that flood zone, then the lender is going to require that you have flood insurance.
And that's separate from would be the carrier for the homeowner's insurance.
Generally, yes.
Okay.
So I do have a couple flood carriers that also
Okay.
write homeowners insurance,
Mm-hmm.
but generally it ends up being separate.
Okay. And how about anything else? How about anything else that's not covered on there that some people might think that's covered on
Yeah, I mean, it really does get tricky.
there? Mm-hmm.
So certain types of homeowners policies, there's three, well, technically there's six,
Mm-hmm.
but there's three main for like your primary homeowners. So it's called an HO1, which
Mhm.
would just cover like fire, lightning, wind, hail. There's an HO2 that covers more stuff along that lines, and an
Mhm.
HO3, which essentially covers everything except what's specifically excluded, like flood, earthquake, a couple things, like that.
Mhm.
Most of which we don't have a huge problem with around here. The only one that is excluded would be like mine subsidence, which I
Mhm.
know that is a Western Pennsylvania
Right.
problem.
Mhm.
And that's one too where generally the lender isn't going to require that you have it,
Mhm.
but I would recommend that you have it. I don't actually sell it, but it's very inexpensive to purchase through the state directly.
Mhm.
They have a mine subsidence insurance fund that I could say my personal house, I carry it, and it's maybe $60 a year.
Oh, okay. Okay.
Very inexpensive. So
Well, how about too, also like your sewers and your sinkholes and different things like that. And you mentioned the earthquake. So those can those get different? Is it riders or something that I
it
okay,
is.
okay.
So you can do things like that with certain carriers. Only certain carriers offer those types of products. Those are the things again, like the sinkhole collapse. Obviously, that's more of a sudden one.
Mhm.
Um, Not a huge Western Pennsylvania problem, but
Mhm.
there's other areas of the state. Like once you get out near like Philadelphia,
Mhm.
out that way, where sinkholes are very common occurrence.
Mhm.
Around here, we have more of the mine subsidence problem. And then as far as like the sewer line,
Mhm.
you can add that. Generally, that falls like how we were talking before about like the home warranty covers like maintenance things.
Mhm.
They're not going to cover that because that's generally a major expense. If you have to dig
Right.
well into the ground to, replace some lines, but that is something that you can add um, onto homeowners policies.
Is that when is that suggested? Is that like you just a lot of people do that? Add that on? Because
It
I see a
is.
lot that being a major issue in certain communities.
Certain
Yeah.
communities, yeah, so
Mhm.
you hit the nail on the head. So, if you're in a brand new subdivision, I might not push it as much as I would to somebody, say, in a community with 100, 125-year-old homes where they have the old terracotta pipes that, they just break.
Mhm. And that's something they can't add after the problem, right? So
Not
what
after the
yeah.
problem.
Yeah,
You can
so
add it before the problem, but
right.
right.
Okay.
Yeah, that would be like if you get in a car crash and then call and say, "Hey, I need insurance right
Right.
now." And it's like, "The police are on the way." It's like,
Yeah.
"Yeah, yeah, it isn't going to cover something that happens after you private."
Even if they find out during an inspection?
If they find out during an inspection, they haven't actually purchased the property yet,
Mhm.
generally.
Yeah.
So yeah, you could still add it at that point.
Okay.
Mhm.
Okay. All right. And is it a lot more extra?
It depends on the carrier. Sometimes it is, sometimes it's not. And to go back to what you just said, just
Mhm.
real quick. So, if you know that there's a problem with the sewer line,
Mhm.
it's not generally something that you should take and turn into your homeowner's insurance right after you buy it. It
Mhm.
looks a little bit, like you're trying to get over on the
Right.
insurance company. It's fraud.
Right, right. Okay. Thank you. And then also too, when you about the home insurance,
Mhm.
I think a lot of times there was too that different things they have, like the dwelling coverage, personal property coverage, liability coverage, additional living expenses. Can you explain those coverages so people can kind of
Yeah, absolutely. So
yeah.
your dwelling coverage would
Mhm.
be what covers the actual structure itself.
Okay.
So if there's a fire in your home, the coverage A, that's your dwelling coverage,
Mhm.
that's going to cover the structure itself. None of your belongings or anything like that is part of coverage A.
Mhm.
Coverage B would be your related structures. So, say you had a detached garage or you
Mhm.
had a shed on the back of the property, something like that. Those would be your coverage B related structures.
Mhm.
Um, and that's generally a percentage of coverage A, either 20%, 10%, something like that. It's just an automatic percentage of that coverage A.
Mhm.
Coverage C is your personal property. So that would cover everything in the room, the couch we're sitting on, the table here,
Mhm.
anything in the room. Um, that's your coverage C, your personal property.
Mhm.
That's also a percentage of the coverage A. You can increase it if you need to.
Mhm.
Um, Generally 50% of what your home's insured for is um, like a baseline number. And
Uh-huh.
then if you need to add to that, you can. Coverage D would be the loss of use, like you said, or the additional living expenses.
Mhm.
That would cover, say, you have a fire here right now. Where am I going to go? Where am I going to stay?
Mhm.
You know, Short term, you could go stay in a hotel, and then if it's going to be a long term, you know, rebuild or remodel, whatever the case might be, um, you could end up in a rental property for a period of time. The insurance company will pay for that as part of that coverage.
Oh, okay. All right. And the liability one is like you said, if that's somebody falls or something.
That's like a slip and fall.
Uh,
Your dog bites somebody.
mm,
Those are your main ones generally.
mm,
Slip and falls, especially, we're getting into the winter months.
mhm,
Somebody slips and falls on ice and decides to take up their problem with you as the
mhm.
homeowner. Your personal liability coverage will defend you and pick that expense up.
Okay. What are you finding most people are purchasing, or is it like what's the common?
So it's generally a package. So
Mhm,
when you buy that, remember how I was saying about the three different types of
mhm,
homeowners policy, the HO1, the HO2, the HO3.
mhm.
I generally recommend the HO3 because it, covers the most
Right.
things. But as part of that package, you'll get um, the other structures, the loss of use, the personal property, liability. So the homeowner's policy is actually a package of several coverages.
Oh, okay. All right. And then also too, I think a lot well, lenders require the homeowners insurance, a lot of
They do.
lenders, most lenders do. So do you find a lot that doesn't that's have cash deals or whatever are they purchasing? Do you notice people?
So yeah, generally most people want to protect their investment.
Mhm.
If you're buying something that you're going to be doing extensive repairs on, also expensive repairs on,
Right.
even if you only purchase the property for $10,000 and you're planning on putting 40, 50,000 into it,
Mhm.
most people, if they lose $60,000, that's going to be a pretty bad day for them.
Right.
They want to insure those properties. And we have certain ways to do that too. So generally like obviously an owner occupied homeowner's policy
Mhm.
would be good for somebody who owns and lives in their home, but
Right.
we have other types of policies like a builder's risk or a vacant home policy that's going to be better for something that's under renovation. But if
Mhm.
it's a cash purchase and somebody's going to live in it,
Mhm.
it's essentially the same process on our end.
Yeah, okay. And you guys do the renters too?
We do.
Okay. And is that kind of well, I know that's becoming something mandatory too with a lot of the different landlords you're
Most of the times. So with renters, you generally have that coverage C, which is
Mhm.
your personal property.
Mhm.
The tenant wants to ensure, that if the building burns, their belongings are all covered
Right.
and the liability, which is why the landlord wants you to have it. They want you to have the liability. If your dog bites somebody, that person's more than likely going to go after your insurance
Mm,
versus the landlord's insurance.
okay. And then how about and also it says I think a lot of times too, understanding the policy that you're getting too, the people kind of understanding and they have like the declaration page and your
Mhm.
policy jacket, deductibles and exclusions. Can you explain some of those?
Yeah. So your declarations page, that's going to be after you actually have an issued policy.
Mm-hmm.
And that's going to show you line by line that coverage A, coverage B, show you what your figures are. Anything else that you've added on, if you've added on sewer line coverage, that would show on there. Your deductibles on there. Most people opt for $1,000, maybe a $2,500 deductible if they're looking to get their costs down.
Mm-hmm.
So the higher you go on the deductible, the lower your premium is going to be because that's more money that you would have to pay out of pocket.
Mm,
So before the homeowner's insurance is going to pay anything, if you have $1,000 deductible, you have to come up with that $1,000.
mm.
Or, if you're having repairs done, like the contractor would take that $1,000 off of what they bill the insurance company and bill it to you.
Oh, okay. Okay, that's a good way. And is that declaration page normally the page that is being used for people to see, like when they want to know what your insurance policy is that the page people need to hold on to show people? Is that usually the
So it
yeah,
would, it
yeah.
would. The lender generally would want to be listed on there as a
Mm-hmm.
mortgagee, so
Mm-hmm.
they'll be covered by that policy as well in the event that, there's a large fire or something like that.
Mm-hmm.
They want to make sure that they get their investment back.
Oh, okay. And how about now we look when you're I guess the main thing too, I notice some buyers they'll call me and stuff. So okay, now there's a situation that occurred.
Mhm.
Where do they go to start calling and how do they know out of pocket and what contractor they have to have certain contractors? What's the procedure when
They do.
something does happen?
So
Yeah.
I generally recommend that I be your first phone call,
Okay.
just so that, especially if it's something that's on the borderline of, hey, should I turn this into the insurance? Should I
Mhm.
not turn this into the insurance? That way we can have that conversation and say, well, how much do you think you have in damage? For one.
Mhm.
Um, Two, what's it going to look like at renewal time? Say if you lose a claims free discount, um, for obviously turning in a claim, you
Mhm.
wouldn't be claims free anymore.
Yeah.
Um, and we can sort of discuss those things. If you had a fire, your whole kitchen is destroyed, that's more obvious. Like, yes, you're going to be
Yeah.
turning that in. And we can get you hooked up with whichever insurance carrier your coverage is with.
Mhm.
And generally, they would handle the claims internally themselves.
And that out of pocket, is that the deductible that they're
That is,
paying? Okay.
yeah.
All right. And how about certain contractors? Does homeowners insurance require certain people you got to go to,
Not
or okay?
necessarily, but most people generally don't have somebody that they're looking to
Mhm.
use. But if they do, they can discuss that with the adjuster. So once you turn in a claim, the insurance company will have an adjuster reach out to you,
Mhm.
and you can discuss that with them. Like, say it's a say it's a wind claim, and a big windstorm comes through and it rips half the shingles off your house.
Mhm.
If you know a roofer that you've worked with in the past, you're friendly with, generally you can use them.
Okay.
um,
They
just
have to be
discuss that with
approved.
your no,
Okay.
no, but generally, you would want to discuss that with your adjuster.
Okay. So they can be paid more.
Mhm.
Okay. Is there a certain amount of claims you can make within a year?
Um, Not necessarily a limit that I'm aware of.
Mhm.
On liability claims, they'll sometimes have a dollar limit. So, say you have $300,000 in liability coverage, they will only pay up to $600,000 in a year's term.
Mhm.
But aside from that, I mean, it's not very common that you would have two
Mhm.
fires in a year, but in theory, you could.
Yeah.
If that's you, that insurance carrier will probably decide not to renew your coverage. Um,
Okay.
but that
Yeah.
that definitely could happen.
Oh, okay. And I was going to ask about the contractors. So when they, I'll go back to that because I
Sure.
forgot that question. Okay. So you have three. You said you had the three main levels of coverage. Was that broken down? Was that the actual cash value, the replace, or is
So
it something
actual
different?
cash value would
Okay.
be like a HO1 policy, that
Mhm.
basic form policy.
Mhm.
Generally, a lender is not going to accept that.
Okay.
Some will, and the only reason they still exist is because they're pretty inexpensive,
Mhm.
but they have a very limited list of what they're going to cover.
Okay.
Um, so, like those vacant home policies for a home that's maybe under renovations or you
Mhm.
just have vacant, a lot of those are going to be a basic form,
Mhm.
actual cash value. But the reason that we recommend replacement cost insurance would be, say your kitchen, you had a fire in the kitchen.
Mhm.
Um, with an actual cash value policy, say your kitchen is 25 years old, they're going to depreciate that kitchen based off of, say, a kitchen's lifespan being 30 or 35
Yeah.
years. They're not going to pay to replace everything that's broken. They're going to
Mhm.
depreciate it
Oh,
and
okay.
only pay, you know, actual cash value because the kitchen is 25 years old out of maybe 30 or 35 that they figure you get out of a kitchen.
Okay.
Um, on a replacement cost policy, however, there's no depreciation, so
Okay.
that's why we would recommend that.
And it has to be also approved on how much they'll cover, like whatever you're choosing to replace it. That has to be
It does.
okay.
If it's just a kitchen, it's
Mhm.
going to fit within your dwelling coverage very well.
Uh-huh.
If you choose lower limits and your whole house burns down, that we might be having a different conversation.
Mhm.
Um, a lot of people, though, they'll opt not to rebuild a home.
Mhm.
So that to take a step back, that replacement cost policy will pay. If that house burns down, they will pay to replace that house that's
Mhm.
there.
Yeah.
Even if it's 100 years old, they'll pay to replace it the way that it was. Um, but a lot of people, depending on the area, are going to opt not to do that because they could just, get an offer from the insurance company essentially to not do that and hit the road.
Okay. And then they just get money to go get another. Is that how?
Yeah.
Oh, okay. Okay.
Yeah.
Okay. And then how about the replacement cost? There was two: the replacement cost and extended replacement. You talked about the extended run, right?
So that was actually just
Okay.
regular replacement cost.
Okay.
So if you insure your home to 100% of the reconstruction value,
Mhm.
certain carriers will offer like a rider, like we were talking about before,
Mhm.
for an extended replacement cost, give you an extra 25% or 50% on top of what you had there, just in case, there's been some inflation or um, cost of labor goes up,
Mhm.
whatever the case might be, from the time you set up that policy to when the claim actually happens.
Okay.
In my experience, it's kind of rare that that situation comes up
Mhm.
because every year as your policy renews, they'll increase that coverage a little bit to try and keep up with inflation.
Oh, okay. Now, how about is there say someone has a lapse in coverage
Mhm.
and something happened during that lapse? Okay.
No,
Okay.
no. So that does unfortunately happen from time to time.
Mhm.
Somebody will forget to pay a bill,
Mhm.
or they just, choose not to
Yeah.
renew it for whatever reason. And yeah, I mean, if you're not insured,
Okay.
that's it.
Okay. Even if you hurry up and got like it happened during the time that there was a little okay.
Yeah.
Okay. All right.
Yep.
All right. And then we talked about that. It didn't- How about also too? Now let's talk about rates
Mhm.
for homeowners insurance. They base those rates off sometime the neighborhood, right?
They do.
And then other factors too. Can you talk about those?
So obviously, a big one is credit.
Mhm.
And then while they don't run an actual like credit report, like they're not,
Yeah.
it's not going to show up on your credit as like a hard inquiry, like, hey, I
Mhm.
just quoted homeowners insurance. It's much different than if you're going to buy a car or a house.
Yeah.
But they do, sometimes it might show up as like a soft pull on your credit,
Mhm.
where if you have very good credit, they're going to offer you good rates. And that's actually the same with auto insurance. If we get there a
Okay.
little farther down the line,
Mhm.
that's a big rating factor. If you have good credit, one reason or another, they think you're less of a risk.
Mhm.
Certain carriers use that, certain ones don't. Some just go by county, some go by specific zip code, um,
Just
things like that.
and how about I seen in there too about claims. If you were one to file a lot of claims or
Yeah,
something. Okay.
yeah. If you have a bad, not necessarily bad, but if you have a large claims history,
Yeah.
with a lot of expensive claims or even one very large expensive claim,
Mhm.
they might decline you.
Okay.
Every carrier has their own like criteria of what they'll accept or not accept. Some it's 3 years if you've had a large claim. Some it's five.
Mm.
Um, I'm not aware of any more than five on a homeowner's policy, but
Okay.
that definitely is true.
And is there have you is what's the likelihood that someone doesn't meet like none of the options work? I mean, have you seen that happen or
It's very rare, and it would
okay.
have to be something very unique. Um, Sometimes we see it where the home's just in very, very poor condition,
Mhm.
and generally that's not going to happen on a purchase
Mhm.
situation,
Right.
because on a purchase situation, you have an appraisal,
Mhm.
the appraiser comes in and they see there's no ceiling.
Yeah.
Um,
Right.
they're going to have something to say about that before we get a chance to.
Right.
But in theory, yeah, something like that could happen.
Okay.
Um, Personally, do I have much experience with it? No.
Okay. And then how about what's some tips to reduce homeowners insurance premiums?
Um, Keep your rates, or keep your discounts up.
Mm.
So
Can you talk what that means for some?
yes,
Okay.
so like your claims free discount,
Mhm.
essentially don't turn in a claim for something where, say you have $1,000 deductible and you have a small amount of damage somewhere, say
Mhm.
from a small, like, you have a, it's a word I'm looking for, like a pot on the stove,
Oh, okay.
does a little bit of damage, say maybe $1,300 in damage, you have $1,000 deductible.
Mhm.
Realistically, it's not going to be worth it for you to turn in that claim just to get that $300 check, if
Mhm.
that makes sense,
Yeah.
because you're going to lose that claims free discount.
Mm.
Um, Discounts a lot of times come in more on the auto side, but there are certain ones on homeowners too.
Mhm.
Certain carriers, if you have like a Ring doorbell, will give you a discount. Um, Home security systems
Mhm.
are pretty much a discount everywhere, especially if they do fire as well as police. You can get
Okay.
a discount. And all we really need for that is a little certificate from the alarm company. They give it to you and we'll upload it, and get that discount for you.
Oh, okay. So I guess it got to be a working alarm system.
It does.
Yeah.
It does. So it has to be centrally monitored.
Oh, okay.
You do get a credit like for having smoke detectors,
Mm-hmm.
things like that,
Okay.
which I definitely recommend.
Mm-hmm.
Um, but yeah, if it's a monitored system, so say you're out at Walmart, and there's a small fire in the house or
Yeah.
something, that alarm company's going to pick it up, notify the authorities, and then, you know, hopefully
Yeah.
reduce the amount of damage. So they give you a discount for that because ultimately it's going to be better for them
Right.
if they don't have to pay out a large claim.
That's true. Yeah, I did see that. And then also too, I wanted to backtrack too. When you do go and get the homeowner's insurance, does someone come out to the home to inspect the home or?
A lot of times they do.
Okay.
Um, Pretty much, I'm going to say 90% of carriers are going to do that now.
Mm-hmm.
They're not looking for little nitpicky stuff, but they're looking to make sure, hey, this house has a roof that's in somewhat decent condition.
Mm-hmm.
There's not, stairs going down with 15 stairs and no handrail, or a couple stairs missing in the middle where, somebody's going to walk down and fall through a stair. Looking for those liability issues
Mm-hmm.
as well as potential property issues. If you have a lot of vegetation growing up the side of your house, vines, stuff like that, they might not like that because, you know, dry times of the year, something like that can catch on fire,
Right.
catch your house on fire. Sad day. They
Mm-hmm.
don't like that.
Yeah. Mm-hmm.
Um, but generally, they're looking for reasonable things like that.
Okay.
And there's also, certain breeds of dogs that certain carriers don't like, as I'm
Yeah,
sure
I
you
did hear.
know, um, as well as most of your viewers
Mm-hmm.
probably know, like pit bulls, German
Mm-hmm.
shepherds, big dogs essentially that
Yeah.
have the help me out here, like people know that
Yeah.
they're mean,
Yeah.
like
Yeah. Yeah. They have the
they
potential to attack somebody.
they're
Yeah.
potentially, yeah, like that breed might have,
They might
mean
utilize that
tendencies.
liability for
Right.
part of it. Yeah.
Right.
Okay.
And yeah, unfortunately, they don't look at it as a dog by dog scenario because, I'm sure you've seen very nice pit bulls before.
Mm-hmm.
I know I have very
Yeah.
nice dogs a lot of
Mm-hmm.
times. Same with German Shepherds, very
Yeah.
highly trained, nice dogs. But, there's mean ones that tend to be more problems than like your little chihuahuas or, you know,
And those were time. That's are probably times if they do insure, they'll probably definitely highly make sure you have the liability and all that stuff in place.
they do. So the insurance
Okay.
company necessarily isn't going to want to
Oh.
extend a large amount of liability there
Oh, okay.
because,
Yeah. Okay.
they're the ones that are going to have to
That's
pay
true.
if the dog does bite somebody.
Right.
But that's something that we look at. If you tell
Yeah.
me, hey, I have a pit bull,
Yeah.
okay, I know I'm only going to look at a few carriers that are going to accept that.
Mm-hmm.
And we do have other carriers where, um, like, they'll exclude the dog liability. Not necessarily a great idea.
Mm-hmm.
Your dog's real nice and cuddly until he decides one day somebody upsets him and he goes to bite them.
Right.
You want to be covered for that.
How about farm animals? Is that
Farm animals generally are not going to be part of a homeowner's policy.
okay?
Um, if you have um, a lot of property and you have a lot of like farm animals,
Mm-hmm.
we could look at like a farm owner's policy, which would cover stuff like that.
Oh, okay.
But you're sort of getting into a whole separate thing there, like a whole separate policy type and all that.
Oh, okay. And as you if you buy two partials like on the same two
Mhm.
house, would that be covered in the same policy
It will.
or okay they are okay
It will.
okay
Yeah, but the vacant land there generally isn't something that, you know, is gonna burn.
right.
But say somebody falls on it or whatever, the liability will extend to that other property.
Okay. And I know too when we have it where we tell people, to get the homeowners insurance, when do you think the best time is for them to start calling and looking around?
Right off the bat.
Right off the bat.
Right off the bat. So um before I was in insurance, obviously,
Mhm.
personally, I have a real estate background.
Right.
I was a realtor for many years. I
Mhm.
technically still have my license, but I'm not active at all.
Mhm.
But in that contract, you only have a certain set amount of days
Mhm.
to fulfill that contingency. So, say you wait until after your inspection contingency period's over,
Mhm.
and you call around for quotes maybe the week before closing, and hey, there's a large claim on this house, and a whole bunch of carriers don't want to write you, but the one that will is, say, super expensive.
Yeah.
You want to be able to have that out,
Mhm.
if need be.
That's a good
So,
point. Yeah,
yeah,
okay, yeah.
definitely sooner rather than later.
Maybe
And
people don't think about that, but yeah,
a
there's
lot
like,
of
yeah,
times they
yeah,
don't. A
they
lot of
think it's
times
like
they don't.
easy. It's like, okay, I'll just do it at the end.
Right.
Okay.
Right.
But you
Because
could,
sometimes those claims will follow you. So say the past homeowner had a, large fire and,
hmm
um, or even it could be a smaller claim. It doesn't
hmm
necessarily have to be a large fire, but that claim stays with the property for that set amount of years too.
Oh, okay.
So they look for claims that you've had as well as the property.
Oh, and they consider
So,
that. That also affects the rate too.
right.
Oh, okay.
Right. Which is why, like, whenever the seller fills out their disclosure statement,
hmm
hey, are you aware of any insurance claims being filed? You know, they're supposed to
mm
disclose that to you so that when you're shopping, hey, I might have a little bit of an issue here.
Oh, okay. All right. And how much does it usually cost for homeowners insurance?
It depends on the size of the home ultimately. So, well, not just the size of the home, but
hmm
that's a big thing. So, I mean, I've had clients anywhere from 400 to probably $7,000 a year for insurance.
Oh, okay.
It's a pretty large range. So, when you're talking replacement cost insurance, we're essentially insuring the cost to replace your home if it were to burn to the ground.
hmm
So, if you have a large, 6,000 square feet home, that's going to cost a lot more than, say, your three-bedroom ranch that's 1,000 square feet.
Oh, okay. Yeah.
um, so that 1,000 square foot ranch is going to be a lot cheaper to insure,
hmm
because it's a lot less of a risk.
Right.
If that house burns down, it's not going to cost the insurance company over $1 million to rebuild.
Right. And
So
how often are they paying that claim? I mean, paying that amount of money.
it depends. If your mortgage um, holds escrow,
hmm
the insurance company can send the bill directly to that escrow account so that
hmm
every month when you make your payment, you're paying a little chip into it.
hmm
And then whenever the bill is due, we'll send it to the mortgage company. The mortgage company will use that money that you already paid
hmm
and ship it off to us.
Yeah. And you guys don't have to have the money up front. You can have it. You can get paid during the closing too.
We can.
Yeah. Yeah.
Yep. So we'll
Yep.
set it up. We'll give everything to the lender. We'll get them a copy of the policy, copy of the invoice, and they can just pay it right at your closing.
Yeah. Or you can pay it ahead of time. Either
You
way.
can do
Yeah.
that as well. Yep.
Okay.
Whatever you'd like to do.
Okay. All right. And then what you talked about auto insurance too.
Hmm.
Because sometimes people you do offer, like sometimes people will opt to get it connected with their auto insurance company, right?
They will. Yep.
Um, what's kind of the pros and cons with connecting it, not connecting? I'm sure they're saving some money there, but
So it can
okay.
be, but it could also not be. So
Okay.
the pros would be more along the lines of it's easy.
Mm-hmm.
Hey, who do you have for insurance? I have Nationwide. I have
Yeah.
Travelers.
Mm-hmm.
And you have the app on your phone. It has both of your policies or however many policies you
Yeah.
might have. They're all in one place. That's the main pro for bundling policies. They also will give you a small discount
Mm-hmm.
for having homeowners and auto with them. You get a small credit on both policies.
Mm-hmm.
It's not always the best thing to do though. So say I'm running quotes for you.
Mm-hmm.
Your home, the your what am I trying to say here?
Mm-hmm.
Your home rate might
Right.
end up being really good with Travelers,
Mm-hmm.
but your auto rate is extremely high.
Oh.
So while it's a bundle, and like the big companies, they all push that on TV, bundle, bundle, bundle.
Yeah.
But if they you know overcharge you for one of those policies, are you really winning?
Yeah.
Just to get that small discount on the homeowner. So I'm going to say 5% of my customers have true bundles.
Yeah.
Sometimes it does work out that way and it's
Yeah.
great if we
Yeah.
can do it, say I have one carrier that's really good for the home and the auto and you get the discount, that's great. But I'm going to look at it both ways because if that one carrier, like I said, is really low for homeowners insurance and high for auto, um, you're going to pay less overall to not bundle.
Yeah. Okay. So that's why they should shop around and kind of see.
Yeah. Yeah.
And
And so we handle that as an independent agent. We're going to handle that for you.
okay.
So I'm going to collect the information that I need from you
Mm-hmm.
to run quotes through all 55 or 60 of the companies that I have access to.
Mm-hmm.
And we're going to come up with the best option. So I'm going to look at it as a bundle
Mm-hmm.
and also not as a bundle.
Okay. All right. And then, is there any perks that you get from homeowners insurance, like something that, like money back or something to help you? with your home? Is there something like that for having?
Generally not.
Okay.
Generally, that's not something, and the only reason being, you would have to pay extra just to
Mhm.
get that little bit of a refund back.
Okay.
So the insurance companies, everybody says, "Oh, insurance is a scam. We should
Mhm.
get money back," all of that, but um, the money that you're getting back is just not having to pay extra premium.
Oh, okay.
Sort of similar if you think of it like you pay your federal income tax as part
Mhm.
of every paycheck.
Yeah.
And then in April, when you file your taxes, you get a tax refund check back.
Mhm.
You essentially overpaid and now you're getting a little bit of money back. So, to answer your question, we're trying to not copy that system.
Oh, okay. All right. I got you. And that helps you too. And you had mentioned that I know we're not going to go to that too much, but you
Mhm.
have you have the real estate background.
Yeah,
That helps you a lot in this area too, doesn't
it
it?
can.
Yeah.
It
Yeah.
can. Yeah.
Yeah. Yeah.
Yeah. That knowledge does help.
Does help. Yeah. Is there any other services that you offer that you might want the viewers to know about?
Not necessarily. So I mean, home and auto are the
Mhm.
main, you know, probably what I spend 90% of my day doing. We
Mhm.
do have options for pretty much anything. If you have a boat, you have a motorcycle, you have a small business, you need liability insurance for your business, or you need property coverage, workers' comp. We have options for pretty much everything.
Mhm.
Um, but yeah, that pretty much sums it up.
Okay. All right. And then why an independent insurance broker? Why should people go with you?
Well, we have several options. So
Mhm.
if I start talking with you and I look at your home, I can see, hey, this home looks like it'll be a good fit for this carrier.
Mhm.
Um, After 5 years, I have a lot of that stuff in my head. I can look at a house and I could pretty much say who's going to have the best price
Mhm.
of my carriers. Um, Obviously, there's always curveballs, but
Yeah.
um, yeah, that's essentially the main reason is because we can shop multiple carriers,
Mhm.
get you better coverage and better price.
Do you find a lot of people going with independent insurance
Absolutely.
brokers? Okay.
Yeah,
Okay.
absolutely.
Okay. And what would you what do you want the viewers to remember and take away from this interview?
Well, the main thing would be really pay attention to the coverages that you have.
Mhm.
Um, a lot of times, and this doesn't necessarily come up when you're buying a property,
Mhm.
but say you've owned your home for 5 or 10 years and you keep seeing that rate go up, up, up,
Mhm.
and you decide you want to shop. So if you provided me a copy of the policy that you have now, which I don't necessarily need to run quotes, but sometimes it's helpful to look at and
Right.
say, hey, um, you're severely underinsured here. Um, Obviously, that's a negative.
Yeah.
If you have a fire and you don't realize, I had a customer. She had a 10% deductible.
Mhm.
She had no idea. So that's 10% of the dwelling coverage. Her
Uh-huh.
dwelling coverage was, I want to say, $407,000.
Mhm.
She had an almost $41,000 deductible.
Oh, wow.
She had no idea. We were actually able to give her a little coverage increase and get her a flat $1,000 deductible, and the price was pretty close to the same.
Mhm.
So don't shop just on price. You want to make sure that you have good coverages as well.
And that's a good point too, because I don't personally do that, but I know people who do, and maybe I should. But every now and then they will go out and shop and see, make sure that if they need to change up or anything,
Yeah,
you
absolutely.
recommend that for people? How often for people to shop around?
Um, Depending on your situation, a lot
Mhm.
of times 3 to 5 years is a good mark to look at.
Oh, okay.
Um, Not so much on the homeowner side, but on the auto side, you'll actually get discounts with certain carriers if you've been with your current carrier for a certain amount of years.
Mhm.
You'll get better pricing right off the bat.
Oh, okay. Because they know you'll
So
be
if you
around. Yeah.
right, they know you're gonna stick around,
Yeah.
they're gonna give you better pricing. So say, um, you've been with Allstate for the last 10 years, and when I go to run you options, you're gonna get the best pricing because you've been with your old carrier for a long time.
Oh, okay. And just real quick, that's something
Mhm.
I want to know.
Sure.
Does it does it make a difference for the carrier if you're with a carrier for a long time? I mean, is there some type of incentive there or no?
Not necessarily.
Yeah.
Some do have longevity discounts.
Okay.
The one that comes to mind, I know, so like Progressive Auto,
Mhm.
depending on how long you've been with them, they add certain perks. If you hit 5 years with them and you haven't had an accident, they'll add accident forgiveness on there as like a no cost extra.
Oh,
So
okay.
then if you're at year 5.5 and, you know, somebody calls you, you look down at your phone and all of a sudden you're in a telephone pole,
Uh-huh.
you destroy your car, they're not going to raise your rate because of that.
Oh, okay.
Um, and that accident forgiveness, that is an add-on on auto policies as well.
Oh, okay.
But Progressive gives it to you for free after you've been with them for 5 years.
Okay. Well, that's good to know.
Claims free for
Claims rate.
5 years.
Okay.
Yep.
Okay. And then what is since my podcast is called Seeking Wisdom Through Real Estate,
Mhm.
what's a piece of wisdom that you would like to give the viewers today?
Um, well, when it relates to insurance, I
Mhm.
mean, I hate to use the same thing twice, but really just pay attention to what your coverages are.
Mhm.
You really, I can't stress that enough, but
Mhm.
if you don't know what your coverages are, you just say, hey, I pay $1,000 a year. Well, that's great, but if your coverages are, way over what they need to be or way
Mhm.
under what they need to be, that's you're not helping yourself,
Right.
you know.
And it doesn't cost anything just to get asked about, right?
No, absolutely not.
Yeah, so they can just have somebody
Yep,
we look at it and
absolutely.
see.
Yep.
Yeah.
So all my customers, obviously, they all have my cell phone number. You could give me a call, send me a text, and I can look at it, make sure we're within reason, and
Mm,
keep on going. Otherwise, yeah, it's definitely worth shopping from time to time too.
okay. Well, how can people well, speaking of that contact, how can people get a hold of you?
Pretty much any means. I'm a pretty easy guy to get a hold of.
Mhm.
My cell phone number is on my website. If you go to jaredcosta.com, you have my cell phone number.
Mhm.
Call, text, email. If you're on Facebook with me, I don't check the messenger as much as I check everything else, but
Mhm.
those would generally be the easiest way. I also have a contact form on my website if somebody wants to go in, enter their information into that. That'll give me everything I need to run some quotes, and then I can get back in touch with you once I have something for you and
Mhm.
hopefully save you some money.
Yeah. I did see your website. It's a nice website. You got
Yeah,
new work.
appreciate
Yeah,
that.
yeah, yeah. And I seen that you got a lot of nice testimonies too about you.
Yeah,
Yes, yeah. So that's
I
nice too.
appreciate that.
You're welcome. All right. So we are done. If you have enjoyed your time with us, please like and subscribe to my channel. See you next week when we seek more wisdom through real estate. God bless.